and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we help you understand the latest trends on the markets and get deeper into the understanding of how are the markets really looking to go forward from here, starting from the benchmark indices to sectoral action and then the specific stocks that are moving in trade. What we'll also focus on is the earnings front as well. Anand Rathi Wealth has reported its earnings and we'll be joined by the management of the firm to help us understand the key insights of the earnings as well as the outlook going forward from here. Quickly, let me just tell you how the market's doing at this point in time before we get into the earnings conversation. About an 84 point of a dip for the Nifty today. So the markets are down in trade. About 19,700 odd levels can be seen on the Nifty, although it's pulling up from the lowest point of the day. We're seeing a lot of sectors actually looking to kind of put some weight on the markets, because of which the Nifty is seeing some pressure being built up, especially the PSU banks that are constantly looking at profits being taken off the table. 1.2% of a dip can be seen for this one. The Nifty IT continues to be a drag on the Nifty constantly for the 2 days in a row amid the earnings that have been coming in, and of course the revenue growth guidance that have been dipping for most of the bellwether IT firms as they're reporting that. The Nifty bank is also not really contributing, with the financial services and the private banks, PSU banks, all three constituents really down in trade. So the heaviest weighted segment of the markets not really performing well today. Apart from it, we're also seeing dips coming in on the small cap 100 index as well. So the pressure is building up not just in the benchmarks but also the broader markets. The sectors that are still doing well today are realty, healthcare, FMCG and the oil and gas space at this point in time. The top losers on trade on the Nifty today include names such as Infosys, Axis Bank, Adani Enterprises, State Bank of India, Wipro and Grasim Industries. On the other hand, the stocks that are looking to buck the trend in an otherwise weak sentiment: Tata Consumer Products tops the charts, 2% higher in trade, IndusInd Bank, HCL Technologies, Nestle and Sun Pharma. So you can see some of the defensives really pulling up from the pharma space and the FMCG basket as well. But let's shift focus to the earnings front. Anand Rathi Wealth has reported a 34% increase in consolidated net profit at 58 crore rupees for the 3 months ended September. It was 43 odd crore rupees in the year ago period. Now the company's revenue has also surged about 37% to 189 crore rupees in the quarter under review from 138 crore rupees in the September quarter seen earlier as well. And also when we see the company's board of directors has also declared an interim dividend this time around of 5 rupees per equity share. Anand Rathi, the chairman of Anand Rathi Wealth Limited, now joins in to share some insights about the earnings and the outlook going forward. Very good afternoon to you, Mr. Rathi, and thank you so much for taking the time out for this discussion. Strong Q2 numbers this time around. Help us understand, what do you believe have been the key growth drivers for the company this time around in this quarter? Are the levers the same? Are you seeing some change really happening on a Q-on-Q or on a year-on-year basis?
Good afternoon, Sakshi. It's a pleasure to talk to you and also to your viewers. As you have seen, our performance has been pretty good compared to last year, registering growth of 34% in profits, 37% in revenues. Earlier quarter also last year, first quarter of the present year, that also recorded sort of similar growth. So what we are seeing is that we are completely in line with our targets. In fact, we are ahead of the line. We already achieved about 55% of the targets which we had set up. So I can definitely see the targets being not only achieved, but maybe going beyond the targets.
Absolutely. Mr. Rathi, you're right, and I was wanting to understand this itself, because you've now upped the guidance as far as your profitability is concerned to 220 odd crore rupees and the revenue guidance of 720 odd crore rupees for the fiscal year of FY24. You're already saying that, more than half of the targets you're already seeing achieving. So what are the factors that you see supporting these numbers and the outlook that you have? And are you still being conservative? Because we've seen, even on a year-on-year basis, constantly you do the guidance and you're always able to beat that. So are you being conservative, and then why is that?
I think, that's a part of DNA of not only me, my entire team, that we would always like to not, tell the story. But having said the story, we always try to see how we can beat it. which is not easy, as you understand, beating in this particular field, beating the targets we have taken were very reasonably good. If you have 20-25% target growth in a services sector, I think is good because it requires huge amount of manpower training, excellent people. Now, the factors which have helped us, obviously, one is in this last 2 quarters, particularly last quarter, the market has helped to some extent. But the major contribution is coming, we are increasing our number of RMs, we are increasing number of clients. In last 1 year, we increased our client number by almost 15-16%.
Yeah.
Similar percentage we have increased in our relationship managers. So we have lot of new inflow coming. And
Sure.
particularly, we have a lot of focus on the equities. So as you might have observed, that our share of AUM, our AUM itself, we have achieved the target of 47,000 crores, and that
Yes.
also we have now revised to 51,000 crores. Okay,
Yes.
and the composition also, if you have seen the change, we are changing gradually, going more and more equity mutual funds. So compared to last year when we had a 48% of the AUM in equity, it has moved to 50%. In spite of markets not being very good,
Yeah.
excepting the last quarter. So I think focus is to bring in new clients, and our major strength is our value proposition. I think the value proposition which we have, which we call it very uncomplicated solution and reasonable return. And in addition to a lot of other support services which we provide, we help people creating wills, creating trust, their tax, planning.
True.
So when we work with any client, we work like a personal CFO of the client, you know,
Yes.
and that's what really brings new clients to us. And also one thing you might have observed, we don't lose our relationship managers, and also we don't lose our customers. So our
That's
whole
wonderful.
philosophy is that yes, we
Yeah.
have to be pro customer. The customer centricity is our primary goal. That once we get a customer, we also treat him as a family, and we make sure that whatever we do for ourselves, we do for him.
Absolutely, sir, and wonderful ethics right there, and the value system that you and that the rest of your team also carries forward as well, and that is what we are seeing being reflected on the earnings as well for you. This time around, you've expanded your client base to 9 to 12 families as of September 2023. You've also added 40 new relationship managers. On a net basis over the past 12 months as well. If you could give us a breakup, what has been the organic client addition this time around, and is it going to steadily grow at this pace, like you're saying 15-16% odd, or can we see even a faster pace of the growth going forward?
You see, our client base has increased by about 1,300 number, 1,300 in last 1 year. And the speed is now better. If I take the present run rate, we expect that in next 1 year, we should be able to add at least 1,800 to 2,000 numbers. For simple reason that number of our relationship managers are increasing. The client references, one key thing where we are really getting help in our new client acquisition is the reference from the existing clients. And my
Okay.
firm belief and a firm belief has been that if your client is happy with you, he will be very happy to bring other clients to you. And therefore, I see the run rate going up gradually. As the base goes up 20%, the individual number, the absolute number will keep on going up. But our belief is a 20%, 15 to 20% growth in new clients is definitely achievable, and I'm
Okay.
sure we'll be able to do that.
And this new client addition, sir, are you also looking at geographical expansion, tier 2, tier 3 cities really coming in as well into your business?
Yes, surely. In fact, we already started doing that. We do have like place in Vizag, in Coimbatore, in Jodhpur, which are not considered very large markets. Our plan is to take it to many other towns. But one philosophy we have that whenever we want to go to new town, we want to go with some of our existing people who understand the culture, who understand the philosophy well. And I think already 2, 3 plans we already finalized of doing it. I think every year at least 4 to 6 new additions places we expect to add.
Okay. Mr. Rathi, I wanted to understand from you. The World Cup is on, so in cricket parlance, I will ask you. You just said that you've upped the AUM guidance from 47,000 to 51,000. That means you've already hit half century there. By when do you anticipate a full century on your assets under management base, sir?
You see, we love to do it as early as possible, but the AUM is dependent on the markets. And that's where it's not easy to forecast, particularly for the short term. If you ask me after 3 years, yes, my AUM will grow at least by 15%. Okay. But in 3 months, 6 months, as you know, you are in this market, Sakshi, things may go either way. We expect that 51,000 is, yes, a conservative number. The new, largely influenced by the new inflows. We are not taking credit for the market. If market goes, let's say 20,500, then obviously this number will be another 2-3,000 crores. Okay.
Okay. You also talked about the equity versus debt, the kind of tilt that you have towards equities. How is the customer behavior really changing, especially when we are looking at constant, geopolitical tensions, coming as headwinds for the equities as well? Do you see a change there? In this month itself, we've seen the mutual fund outflows really for a lot of segments, including large caps, including debt, liquid funds as well. Do you see some of that coming in as a nervousness among customers, or do you think retail investors have also matured enough and they may continue to believe in the India growth story? What is your own sense, sir?
I think, Sakshi, I believe the job of wealth manager is to really create the right thinking in the mind of the investor. Yes, investors do get influenced by, changes in the market. And that's where I think our ability lies in persuading the clients not to get influenced by the short-term changes. Okay. That's the reason that even last 1 year, overall, if you exclude the SIP, there might have been outflow from the other equity funds. But in our case, we have been able to add, in last 1 year, we have been able to add in last quarter itself about 1,500 crores of equity mutual funds. Because my belief is that, if you're a long-term investor, you should not be worried about this geographical any impact coming or election results impact coming. They are short-lived. You see, unless till the world gets completely destroyed, that's a different matter. But I think as we see it, these are short-term impact which comes. One should be above it. And we are happy to actually tell you that we are able to persuade our customers over a period of time that, look, stay invested, keep on adding on your investments. And if it has given you 12 to 14% return over last 5 year, 10-year period consistently, or a CAGR basis, not year to year, then I think we find that people understand. Once they understand, then they don't, get influenced by the short-term changes in the market.
Right. So on the competitive landscape, I wanted to ask you, how are you looking at the industry currently? How is the competition shaping up? Are you planning to increase your market share? What would your strategy be competing with wealth management firms by other private companies and those also backed by the banks as well?
Actually, I think this market is so big. I think there is so much scope for everyone to grow the business because traditionally, even today, our financial saving, the largest amount is in fixed deposits, where the return is the lowest. Okay. And I think as more managers come, I always believe more players will increase the market size and therefore cake will keep on becoming bigger. Yes, we do intend to increase our market share, which is increasing. It will, in long term, we'll keep on increasing our market share also. And the size of cake itself is increasing. Today, I think our number of clients may be less than 1% of the eligible HNIs to whom would like to go. So, frankly, there is hardly we have touched the tip of the iceberg, as they say. Okay. I see going forward, there is a big market there. We will definitely grow. Competition also, it's good. I always believe, there are more customers when larger number of competitors are there who really educate what the wealth management is about. It's not just product buying or selling or doing the trading. If you are a long-term investor, there is a lot of education required, and I think more competitors help that education, and therefore the cake is always going to expand.
Okay, well, on that note, thank you so much, Mr. Rathi, for being with us on the show and discussing all these insights about your earnings. And here's wishing you all the very best for the coming quarters and hope to catch you again soon to get more insights about the industry and your own company's outlook as well. Great having you with us on Business Today Television, sir.
Thank you so much for having me, and also all the best to all your investors for coming festivals. We are going for Dasara, Diwali, so all the best to all your customers too.
Season's
All your
greetings to you too, sir. Thank you so much. All right, and let's get back to the markets now. 19,720 currently on the Nifty right now, a dip of about 73 odd points. Anand Rathi Wealth, we just discussed Q2 earnings, strong earnings right there, and the company's management clearly believes in the growth of the company, focus on increasing the market share despite the competition rising, and the focus on retaining the current clients and also growing organically the current client addition as well, and also growing business in tier 2 and tier 3 cities. We've seen the stock dip about 5-6 odd percent on an intraday level today. Right now it's down about 1.8%, but that's also about you can see the graph of last 1 year on your screens. It's been a one-way rally up, and that is what you have seen as a profit booking really taking place post the strong earnings in today's trading action. But let's get to our market expert of the day. Raghavendra Singh now joins in, market expert. Welcome, Raghavendra, and thank you so much for taking the time out. Before we go ahead and discuss more about the markets, we just discussed Anand Rathi Wealth's earnings as well. Your own sense of the earnings that you've seen over here, the Q2 earnings, anything that you'd like to suggest, especially in the wealth management business in this entire sector, and how Anand Rathi is placed there? Raghavendra, could you unmute yourself, please? Yeah, okay, we can hear you now.
So very good afternoon, Sakshi. I heard about Anand Rathi management, what they are planning and how they are going to implement their new strategy. As far as Anand Rathi management is concerned, I believe they have very promising plan for the future, and I think that is going to implement in the stocks. We can see stock trading about 2,000, 2,200 because the kind of strategy they are going with. They are going to start in pan India level. They are going to start their operations in north. They are going to start their operations in south. So everywhere they are very much keen about their customers, their management, their staffs. So I believe that kind of management definitely going to deliver a very good numbers in future also.
Okay, got that. Apart from this, the market's showing dip today. What do you have to say about the dip after those 2 or 3 days of constant rise that we were seeing? Again, consolidation happening. What is it? What is your own reading about the markets?
As far as Nifty is concerned, we have seen, a short covering in Nifty from FII side. Almost 30,000 contract have been covered in last 3 days. The kind of ratio we have seen earlier, around 70-30 of short and long. Now that has come down to 50-50. Now from here onwards, I believe this is a buying opportunity. I don't think any major dip coming in next week. There are small hiccups will be there, but I don't think that going to create a very big mess. So I think this is a buying opportunity. I won't be surprised if we close above 19,800 today itself. So I am very much positive in market and Nifty and Bank Nifty.
Okay. Any other segment that you're bullish on? We're seeing a lot of movement coming in on the commodity-based stocks. We've been discussing energy-based stocks with you for a long time. Coal India has been one of your top preferred stocks. It's still up today. But oil and gas as well. We're looking at a lot of these gas majors like GAIL and even the metals and mining space stocks really moving up in trade yesterday. What's really happening in the entire energy commodity basket?
The kind of run-up we have seen all energy and commodity basket, that is very promising, and I think the strong breakout on the chart. So I believe after a long time we have seen strong breakout in GAIL. MCX is another commodity exchange which are giving good run-up. So overall trend is positive, and I believe the momentum is going to continue for next 1 or 2 months. So I believe all these stocks, whether it is PFC, REC, Coal India, MCX. And apart from that, oil and gas, IOC, MGL, IGL, all have given a strong breakout on the chart, and we are very much positive in these sectors.
Okay, got that as well. Let's talk about some of the stocks that are up in trade today, especially from the consumer durable space. Tata Consumer Products is the top gainer today at 2.7% higher in trade. Anything from the consumption basket that you prefer right ahead of the festive season. Now that Monday onwards, we will be celebrating Navratri, and of course, a lot of people who've been waiting to, purchases to do a lot of purchases during this period. So the consumption space will clearly rise. Your own sense about the consumption basket, any preferred stock for the festive season that you can share?
Definitely, consumption sector is going to be in demand because of the festive season is coming ahead. So I believe Colgate is a stock, Nestle, ITC, and apart from that, the auto stock, because the festival season, people are going to buy and purchase the auto. People are waiting for a long time after this. I think this is going to
Sure.
start. Going to start very soon. So I think the auto sector is going to perform. So Maruti, Tata Motor, Ashok Leyland, these stocks are going to give a good run up in coming festival season.
All right then. Well, thank you so much, Raghavendra, for being with us on the show and discussing all these insights with all our viewers. Great to have you with us. Markets clearly slightly under pressure, consolidation mode going in, but below the surface, a lot of segments and sectors that could continue to go strong amidst the consumption boost that we will expect during the festive season. Just like how Raghavendra pointed out, he's positive on the auto space, the consumption space, and of course the commodity space that is also on the rise right now. We'll continue to track the markets for you through the trading session, but do stay tuned onto for all of those market outlook as well throughout the trading session. But what you should also get ready is for our market special series, that's Market Masters, where market gurus reveal their investment strategies for a winning portfolio. So join us on the coming Monday, that is October 16, with Vijay Kedia, Managing Director, Kedia Securities, to get his market insights and in-depth market analysis. You can also send us your queries on this number that's flashing on your screen, 730-308-0488, and these questions will be taken live.